So today I have for us a very cool episode. This is not one of my episodes. This is an episode you can find over on the Dental Amigos podcast. Dental Amigos are Dr. Paul Goodman and Mr. Rob Montgomery. Both are really great people inside of dentistry. Rob is a fantastic dental attorney. Paul runs a really great group called the Dental Nachos group on Facebook. And they've also got their own podcast. So they've been kind enough to allow me to rebroadcast this episode when I was a guest on their podcast. It's a really fun episode. They're really fun guys. They take themselves very seriously when they need to, but the rest of the time, they're really nice, casual guys that are fun to hang out with. So take a listen today. Go check out Dental Amigos. Check them out on iTunes. Find them on the internet. Go onto Facebook, look up the Dental Nachos, and enjoy today's episode. Thanks, guys.
Hello, everyone. I'm Rob Montgomery, and I'm joined, as always, by the head nacho himself, Dr. Paul Goodman.
Hey, Rob. Great to be here.
Good to have you, Paul. Always good to see you, and welcome to another episode of the Dental Amigos. Today, we are joined by a special guest, Jonathan Van Horn, CPA. Jonathan is a certified public accountant who, like me, represents dentists. And his real primary niche, even within that niche, are dentists that are new to practice ownership. So either as a startup or an acquisition. Jonathan is the creator of Dentist Metrics, which we're going to talk about in some detail today. And that, in the meantime, though, it's a concept that aims to completely automate and outsource bookkeeping, financial reporting, and tax portion of the dental business, so that owners can focus on running their business and being dentists. Jonathan is also a host of a very popular podcast called Start Your Dental Practice. So fellow podcaster here, which is always fun for us. And now, without further ado, here's Jonathan Van Horn. Welcome, amigo, and thanks for being on the show.
Thanks, Rob and Dr. Paul. It's a pleasure to be on. I'm really excited.
Thanks, Jonathan. We'd like to start with some hard-hitting questions. So
Let's do it.
I would like to ask you, if we go out for nachos where you live and you get to order, and I'm with you, what is your favorite nacho topping?
I always have a soft spot in my heart for chicken. I think that it's the if you're looking for a meat to go on a nacho, I think that it's the best one.
I agree with you. My favorite nachos, the Macho Nachos at Alves, just a few blocks away here in Philadelphia. That is my favorite topping. And since I'm a dentist and I'm always looking for free stuff, I buy a lot of nachos each year. And as an accountant, can I write those nachos off on my tax return?
for you, I'll say yes.
Oh, thanks.
Here, Jonathan, here's a better one. If Paul buys the nachos for Rob Montgomery at Alves and the drinks, can he write it off? That's the important question.
Yeah, so the old saying, you can write off anything you put on a tax return is a write off, but the legal way, is in terms of the Internal Revenue Code, and this actually changed at the end of 2017 in the Tax Cuts and Jobs Act, is that meals and entertainment can be deductible. It's a little bit grayer than it used to be. To be honest with you, it used to be that if it was a incidental meal to a meeting, then it could be written off to the tune of 50%. The mindset behind the government was, if you pay for the meal and it's a business meeting, half of it's going to be for you and half of it's going to be for somebody else, regardless of if there's 100 people there. That was kind of their thought process, which seemed odd, right? But they've backed away on that a bit, and they've changed those rules around to where it's a bit more specific on if you can or cannot deduct any types of meals or entertainment in particularly. And then they've just recently, like in the last month, came out with another pronouncement to clarify those a bit more, which anytime they clarify something, it actually still mean it sometimes raises more questions. So it's all very, very new. So we're still having to kind of see how that all rolls out. The gist of it is that if it has a business purpose, then you can deduct it. It's probably going to be to the tune of 50% being deducted. If it's for your staff, like a meeting or something like that in your office, then at that point you're probably going to be able to write off 100% of it. And I haven't reread through that pronouncement since I looked at it initially, so I'm hoping I'm quoting that correctly. But that's how I remember.
So summary is Paul should buy Rob nachos and margaritas.
Yeah, it's our meeting, right? It's our team meeting for nachos.
To discuss the podcast.
Can you write off love? I think you can write off love, so I'm going to write it off.
So, Jonathan, I've had the pleasure of hearing you speak at the Ideal Practices Startup Practice Blueprint probably too many times to count now, and it's always nice to see you at those events and hear what you have to say. So I know a lot about you, and some of our listeners probably do, but tell us, what your role is in the dental world.
So we see our role at Dentist Metrics as being guides to new practice owners. There's a lot, and like Rob, you can attest to this, that there's a lot that our clients don't know that they don't know. And
how about
in the financial world, accounting world, tax world, we find that there's a lot of docs out there, young docs especially, that they'll do some research, but they don't really know how it pertains to their situation. And we find ourselves as being the guide to those new business owners to help them really navigate that landscape of, what even is accounting? What even is tax planning? How can I, be proactive in making sure I pay the least amount in taxes as possible that's legal? How do I work around the Internal Revenue Code and, or work with their Internal Revenue Code is probably a more eloquent way of saying that. And to allow myself to be paying in what I'm legally obligated to pay in as a citizen of the U.S. because of all the benefits that I reap from said citizenship. But still, make sure that I have, savings to where I'm not paying in too much that, is excessive compared to what the Internal Revenue Code would afford me. And, that's where we are. And we find that a lot of people have misconceptions about CPAs in general, because we are a CPA firm. No, don't get me wrong. I'm not just trying to phrase it differently because of the fact that that's, kind of like the new age thing to do. We are a CPA firm, but whenever we get new clients in, we have a repetitive issue with the majority of those clients, and it's what I just described to you. And so we have to view ourselves a little bit differently because the traditional CPA firm model does not lend itself to being that guide in most cases. So we focus on the new practice owner. We focus a lot on education of, how of the tax code, education of accounting, how to understand your numbers, how to understand your accounting reports, what those accounting reports mean, how to use them to, drive profitability, how to hold your employees accountable, and all the little pieces that go along with that. So it's a bit, nebulous in that way, but, we're there to help you through that process as much as we can as a business advisor. And, we've got about 150 dental practices that we help out with that. We've got clients in over 30 states, and we really enjoy doing what we do.
Yeah, that's cool, and that's what I've observed too. And I think a lot of people have the misconception that the CPA's role and sole role is to file taxes, and I guess there are CPAs that do that, and that's okay. But you kind of do the accounting version of what we do, which is there's sort of like the basic stuff, and then you provide the industry expertise and the guidance. And as you said, you're a business advisor. You're not just doing tax returns. And whenever I talk to somebody, a new client, and say, who's your CPA? Do you need a referral? And they'll say, well, I have a CPA, and do they do dental? And do they have dental clients? Yes, they file. They have dental clients. They file tax returns. So I'm like, well, that's not a dental focused CPA. I want them to be working with a business advisor. And I think the neat thing, it sounds like too, what you've been able to do is really take the profession and then kind of use that to do more with it, which, to me is a really exciting thing.
Yeah, it's really fun. We get to work with people that are new business owners. They're excited about business ownership. They might be a little bit scared in some ways, but we help them through that. And that's a lot of fun for us.
Yeah. Now, so Jonathan, what is dentist metrics? I mean, when you talk about automating and outsourcing certain things, like kind of what is the sort of, well, I would say secret sauce, but like what is it? How do you guys go about that, and how are you different in that regard?
Yeah. So the thing is there's not really a secret sauce per se. It's really that we just work really hard with our clients to make sure that they can focus on the things that are important in their practice. So, with the automation of accounting, we can, make it to where people, typically people will have, their financial reports within 10 days at the end of the business close of the month. And all they have to do is, once or twice a month is answer an email about what these 10 transactions are. We'll give them what our guess is, but they'll help us out with defining that more accurately. And that frees up a lot of time for the practice owner. That frees up a lot of time for the practice's employees. And we actually did a poll on some clients before to see about how much time we were saving clients with that. And this was back whenever we were taking on clients that were already existing practices. And we'll take on people that have acquired a practice in the last recent past. But we were finding that we were saving people between 15 and 25 hours a month by having us do this accounting for them. Whether it was making it easier for the practice owner to understand what the numbers meant, or it was taking time off from the office manager to having to go in and, mark on the credit card statements what everything was. We completely get rid of all that. So that office manager or that practice owner can focus on more important things like maybe getting out into the community and networking, or, working on a marketing campaign, or, providing a class to the employees, or, working on AR, or getting people in for treatment plans that never got scheduled. Like things that are actually important for the practice growing, they can refocus all that time into that. And so that is what our focus is. We find that a lot of CPAs, again, not all, a lot of CPAs focus on compliance, which basically just means, not necessarily a get out of jail free card, but a, keep myself out of jail card. Make sure that I don't get big letters in the mail saying I owe a bunch of money is what a lot of CPAs focus on. And so I guess if you want to paint us in a different stroke, then that is our different stroke, is that we focus on, making sure the practice owner is able to focus on their practice, as well as, have the education behind that to be able to have a really great practice, hopefully.
John, I think it's just really awesome. We've had a lot of discussion on the podcast about these subjects. So as an enthusiastic but exhausted owner of two practices and two human beings, what I would like to share with our listeners, because I think what you do is great, is that, my dad was a dentist, and, years ago, they didn't have to deal with parts of the dental practice because they just didn't exist. I mean, I did a CE course recently. We had sponsors, and we had an IT sponsor, and it was great. And he talked about what he did with, the practice and all the upgrades to the software. And, that was something that dentists from 30 years ago just didn't have to deal with. But everyone always had to deal with this part of their business, and it's not the fun part. And then when you save people 15 hours a week, I just want to, just highlight to our listeners, you're saving them the good hours, because this stuff either has to be done after work, before work, at lunch, on the weekends. So you're saving them hours that are so valuable, which I just think is great.
Yeah, we have before I was in the dental industry, I always looked at dentists and I was like, why do they have a day of admin? They're working 4 days and they have a day of admin. And then, whenever we got into the dental industry, I guess 5 or 6 years ago, we quickly realized that was the reason, is because they're doing dentistry all week long. They don't have time to, work on the business because they're always working in the business. And so
I would love it just, I could create, and you're doing it. Dentists should really not tell people they work 4 days a week, because they work on patients 4 days a week. But, all that other stuff that they do, everybody else in the world, they call that work.
Exactly.
Right. Running the business.
Yeah. So there was
day off.
15, 20, 25 hours that happen before and after at lunch. That's real work. And that's why most dentists really are working 50 to 60 hours a week. They just don't understand that. And when you can take some of that away from them, I just think that's great.
Yeah. That's what we strive to do. I mean, that's what we get excited about, and that's what our team's been trained to do.
Yeah, that's cool. Good stuff. Let me know when you get into the law firm. I'm envious as I listen to this. No, we actually have a really good accountant, so I shouldn't say that. So what we reached out to you most recently, Jonathan, and you and I have discussed this before. And Paul and I find ourselves talking about really these two topics, fairly often. And pretty recently we had a little thread going on. Was that Nachos?
Chair practices.
The chair practices, which is a great Facebook group that a lot of us participate on. And whether you should buy a house or a practice first. And so I want to talk about that, and then I want to talk about my other favorite real estate question, which is, should you buy the real estate where your practice is located? So realizing that there are a lot of facets to both of those, but I think it's really good for people to kind of hear some of the talking points and some of the things to kind of keep in mind. So let's start with the subject of buying a house versus buying a practice. And this specifically, I think the Facebook post, Paul, was just that, hey, I've got an opportunity to buy a practice. I'm concerned because I also want to buy a house. If I buy a house, am I going to be able to buy a practice in the near future? And as is also often the custom on a blog or a group, lots of people gave very definite advice without probably knowing all the circumstances. Nobody's afraid to chime in, right? So we're going to do that to you a little bit here, Jonathan. Sure. But tell us, kind of what's, if a client walks into your office and says just that, hey, I'm thinking about practice ownership. I'm an associate now. I'm sort of like medium paid. I'm not well paid. I'm not underpaid. I'm not knocking it dead, but I've got this pretty good opportunity to buy this practice. I can, increase my salary, but I also would really like to buy a house because I'm at that kind of time in my life, and my spouse feels as though it's that our time of our lives to do that. What do you tell that person?
So what I would tell that person is that the most important element of that question is, what practice are they buying? Are they doing a startup, or are they buying a whole, an existing practice? And if it's the latter, then it becomes down to what level of quality is that practice. And when I say quality, I'm not talking about, the ability of the current dentist or anything, or how nice the furniture is or anything like that. I'm talking about, what's the cash flow doing? Because the bank may care if you have a home loan. They may not care if you have a home loan, if you're getting a really great cash flowing practice. And that also depends on how expensive your home is going to be. Because what they'll look at is your total debt amount, as well as your cash outflow a month. So if you're in Arkansas and you're going to be buying a $250,000 a year home, then, or you're in New York and you're going to be buying an $800,000 home, those are two very different questions. Or the answer is very different. So in general, I tell people, if you've got a really good practice, you're going to be able to find a bank that will lend you the money. If you have a home already and you go to buy a practice, if it is not one of the big dental lenders, then they'll probably want to put you on an SBA loan, which would mean you'd have to put your house as a guarantee on the loan, effectively. That's just a requirement.
Let's just stop for a second. Just talk about that briefly, because I think a lot of people don't realize what an SBA loan is and what that means to to guys like you and me. Like, we hear that and we cringe and sort of say, "Ooh, wow, is there no other alternative?" I think just by virtue of the fact that it's the SBA, the government's got this loan program that's out to help us. I mean, that is not the first option for financing, as you said. So that's a big one where, the SBA, if they're involved, and what that means is it's a government-backed loan. So if the local bank or whoever makes the loan, if there's a default, the government will step in and guarantee that. But, among other things, you're going to pay big fees for that. very expensive loan fees for the guarantee fee. But they also expect a lot of collateral that the traditional dental lenders won't ask for. So you're probably looking at, if you're going SBA on a practice loan, the SBA is going to require a lien, a mortgage on your house, which, go to a dental lender, you're not going to see that, right?
Right. So one point for not buying the house is if you do the SBA and you don't have a house, there's nothing they can put the lien on. But
there you go.
But that's a very minor point in my mind, because of all the other factors go in. In terms of, will that affect my ability to get a loan? I think it's impossible to say that it will not affect your ability to get a loan in a vast array of specific cases, but I don't think that's going to be the deciding factor in a large majority of practice acquisitions. If, and I would make the argument, if that tipping point is that you have a reasonable home loan, that they're not going to lend you the money, then that practice may not be the best practice. They may be saving you if that's the case.
Yeah, right.
Because I've seen banks, salivating to get certain loans, because of the practice that is selling. It's a big practice doing, 1.4 million a year in revenue. It's got one doctor and 5 staff members, and the associate, has been mentored by this doctor for a while. That bank doesn't care, and it's cash flowing $700,000 a year. That bank doesn't care if that person has a home loan. It's almost, they're going to find a way to get that money to you if it's a big, right, if they understand dental lending. But if it's one of those borderline cases where it's not this dream, ideal situation, the home loan could negatively impact your chances. I won't say it's going to be it's going to make it where you don't get the loan. I think it could slightly negatively impact your chances. So if you had a 100% chance before, maybe it's a 94% chance now. I don't think it's, and then the beauty is if that doesn't work out, there are 100 other banks out there that might not pay attention to that.
There's something I'd like to chime in with, though, because you guys are having a really great discussion on the numbers and things like this. But owning a home prevents you from getting a loan for a practice. And I can say this lately as a broker, it prevents you from getting a loan because you never apply for the loan, because your spouse never considers moving to that area.
Yeah, right.
So I wrote, if the greatest thing, what's your favorite thing to do besides spending time with your family? Because everyone's supposed to say that. Let's just say it's eating nachos. The opposite of that is moving. So you could have, moving, we all remember from college, dental school, any of these times, it's a terrible experience. And people will do almost anything not to move. So I've had situations as a broker that were eye-opening to me, where I have someone say to me, I want to buy a practice. Please find an acquisition for me. I don't want to be in this associateship anymore. This is before they meet a Rob Montgomery, before they meet a Jonathan Van Horn. So I find them someplace and I say, okay, this is 20 miles from where you live. And their answer is, I don't want to do it. My wife doesn't want to move. My husband doesn't want to move. And I said, why'd you buy a house? And they said, well, we just thought it was the right time. So maintaining your geographic flexibility in 2018 is just so important. And these are stories you guys never even hear about because they never get to you because they talk to a broker. I tell them where this practice is that does $900,000 a year and they could make $350,000, and they are just totally unwilling to consider it because their home purchase prevents them from doing it from an emotional perspective. And
sure. Yeah.
That's what I was saying. This group is, we think this world, even the startup world too, dentists tend to think it's about numbers, but it's really about people. And in this scenario, it's about the people in your life, mainly your spouse and your kids.
Well, I'm telling you, just emotionally too, Paul. There's an actual dollar cost.
Oh yeah, right.
Doing it. So the transaction cost, like if you buy a house in one area and then you find you want to move, even if you're willing to do the move and buy a house someplace else, you have to move, which means you have to sell your house, which means you have to pay a realtor, which means you have to go through all those other expenses. And when you're fiddling around with the move, you're not making money practicing dentistry either. So it does have, it's not even just an emotional thing. There are transaction costs associated with that. I mean, geez, where we are in Philadelphia, the real estate transfer tax alone is 4%, which, you get into the 4% for that plus the 6% for your realtor. And it's like, wow, it's going to cost me 10% to sell my house, and that becomes for some people, that can be a real number.
That's a good point. I'm sure your clients say this, Jonathan. On this group, people are saying it, and I say this with the most nacho-loving kindness way, but they kept saying, I want to buy a home because I want to build up equity. And I always just think that's one of those catchphrases, because if you need that equity, you can't just rip out part of your family room and use something to pay for in your life. And you just strangle your cash flow a lot of times when you have a home. And I try to recommend to my residents that say, hey, just keep yourself flexible by renting. You can always buy a home. You may want to move somewhere for a good practice that you're not considering. So that's just my nacho 2 cents on it from a.
Yeah. And I definitely think. Go ahead.
Oh no, go ahead.
I was going to say, it definitely will require, if you're deciding to purchase a home, it'll definitely require, if you have a spouse and kids and things like that, for you to take that into consideration of, hey spouse, I'm thinking about buying this practice that is, geographically favorable of us to be able to purchase. But if this one doesn't work out, I still want to own a practice at some point. That may mean we may have to move again. If we are being tied down to a spot, then maybe we should consider renting instead. That's just a discussion between the spouse and or the couple and being honest about themselves. Now, that doesn't mean that things can't change over time. That you say, okay, yes, we'll be able to move, and then either you become emotionally attached or financially attached to the house, because we've all seen what happened in 2008 when everybody, the real estate markets just plummeted and people got stuck upside down in houses. I mean, that's a very real risk that I think that a lot of people that are buying houses for the first time are very ignorant to. Hopefully they do the research and they, find something online that says, or they talk to someone who bought a house and got stuck in it because they couldn't move. But that is a very real financial risk that you take whenever you purchase a home, is that you can get stuck in it. And then there's obviously economic expenditures of moving that have to be taken into consideration as well. But in terms of buying the house versus buying the practice first, I think that I agree with everything that both of you have said. But as far as in terms of getting the loan or not, I've just not seen that be that big of an issue. If it's an acquisition on a practice, it's a very good practice. So,
well, and like, I'm going to ask you a question about that in a second, but the other thing too that I think people sort of have a misconception about sometimes or overlook is when you talk about equity, like you really need to be there for a while before you get that equity.
Yeah,
when you borrow that money from the bank, like for the first however many years, John, you can tell us you're paying more interest than you're paying principal. So
the rule of thumb that I'd always heard whenever we were doing our research for buying our first house was like, if you're not planning on being there for 5 years, at least you should rent. And because you're unless you're in a market that just, skyrockets in value, which you should not be banking on that happening. That shouldn't be in your thought process, because that's basically just a windfall is how you should approach those types of things. Then you shouldn't make that decision to go there unless you're willing to be there for 5 years. If you stay there for 5 years, then that's the turnaround point of breaking even on average from all the studies I read about, owning a home and then selling it. Now that's obviously independent of the market crashing, but that's, just kind of the rule of thumb. So yeah, and I think that's, if anything, I would say you might want to even stretch that out a few more years now, just because the real estate market in a lot of areas of the country has been so flat for so long.
Yeah, I know some of the tax laws too have made it a little less advantageous to own a home.
And just to chime in about another thing that I know nothing about, the stock market. Everybody, when the stock market is up, 3 months ago, people are, look at what I'm worth. This is great. Meanwhile, they're not worth. They have not sold anything. Now, when it comes, tumbling down, everyone says, well, it can go back up again. But in both scenarios, they have not, disengaged from their stock position. So, they really are not worth more or less. It's the same thing with home ownership. So when they say our house is tripled in value, I'm like, yeah, you're not leaving it anytime soon. So you never know where it's going to be when you do leave it. So it's just I'm amazed at how emotional this scenario gets about stuff where people think it's about numbers still.
And you know, I don't know if this is a dental only thing, but every study I've read recently has said that younger people are renting more on average now than ever before.
Right.
So I don't think that means that home ownership is necessarily declining. I just find I've just been seeing that renting is much more popular now because people don't want to keep up with the yard. They don't want to keep up with, the outside of a house. They don't want to keep up with, they don't want to have to, make decisions as far as being somewhere for a long period of time because people move more often than they used to in the past. So I'm definitely seeing that people are renting more often now. But in dentistry, I do seem to hear the same thing you guys are saying of, young family buying a house, and then, going out and finding a practice. And I think that may just be because of the fact that the age that a lot of people finish school and they're having to move anyways because they usually don't stay. I mean, some people obviously stay where they went to school, but they're having to move anyways. And so they have this potential earning ability that states to them, I'm seeing all these other people buy houses, so maybe I should buy a house too. And everything that we've talked about so far, points to the fact that may not be the best decision. It should never be to me, buying a house, it is a financial decision, obviously, because you've got to pay money for it and you've got to figure out how much your monthly outlay is going to be, for, versus your revenue or your income. But you should, in my mind, if you're a young person, unless you're buying the house you're going to retire in, then you shouldn't be thinking about that as a long-term investment. You should probably be renting, which is a bit of an independent question from the should I buy a house first or buy a practice first.
So you've qualified a couple of times. You've talked about buying a practice. Now, you're distinguishing that from doing a startup. So if somebody says, hey, I want to do a startup, should I do my startup or should I buy a house? Is a different answer as far as financing goes?
That one's a little bit easier. For me, you should be doing the practice first if you're going to be doing a startup because, like Paul said, you can get stuck in a spot and that you get this singular view that the area that you're in is where you have to practice. And as Rob, as you can say that, we see startup practices all over the country, some that, that in a lot of the times it's because of the area that they go to. And you don't want to be stuck in a certain area because of your geographic roots being laid down. So That is a little bit easier because it's, there are some areas of the country that are great to live in, but are bad to practice in. And if you think about that for a second, that makes a lot of sense because if it's great to live in, there's probably going to be a lot of competition. And competition is not necessarily bad, but it definitely makes it harder sometimes.
That's what Jamie Amos says that, somebody says, where's the best place to do a startup? He said, well, you have to promise you're going to go there. Right? And Paul has that conversation a lot of times with people. If you have practice opportunities or associate opportunities in some more, let's say, less urban, more remote places.
I can't ever go to Erie, PA though. They won't like me because I use that as an example. So a lot of times I say, okay, I got a great practice in Erie, PA, and I just use that because I think it's sort of the middle of Pennsylvania. And no one says, oh, I'm ready to go there. And I said, see, that's it's understandable, but it's a different landscape. I mean, I would say, and I've shared with Rob, most people in my dental generation went back and practiced where they grew up, but now it's a really different landscape for everyone out there.
Yep, absolutely. And with the startup again, there's everybody's situation's a little bit different. If you're an associate making a certain amount of money a month and you can prove to the bank that you're going to have continued employment after your startup opens, which, for some people is an awful proposition, but it's sometimes what you have to do to get the deal done. Then as long as you can cash flow the note plus the mortgage, they're usually going to be okay with that. But I think that if you're like 100%, I'm going to do a startup, like that's what your personal strengths lend yourself to, then man, putting down roots to a point where you can't get out of those roots is a very dangerous proposition if you're going to do a startup. Because if you're going to do a startup, why not do it where you're going to be able to knock it out of the park rather than just where you end up being? That doesn't mean that someone's not doing a great job doing a startup down the street from the area they're familiar with, but the path of least resistance may be somewhere else.
Right. Yeah. I mean, it's hard enough. I mean, that's part of the whole planning thing. This is just one more aspect of, if you prepare and you work with the right people and you have the right game plan, you can really stack the deck to succeed, as opposed to, doing things backwards and by yourself, and then, 3 years later wondering why you still have, 2 other part-time jobs when you have a startup, But you did it cheap, you did it on the cheap, right? You saved a lot of money with it. But so it's interesting stuff. Now, so then our next burning real estate issue question, surrounds whether or not people should own the real estate where the practice is located. It's a subject that I just find myself discussing more and more with people, and just really becoming kind of more solidifying more my position that people really have to be careful about buying the real estate. And I think there are a lot of people just really miss the point here, that if you are going to own a dental practice, the place where you should be is the place where you can make the most money. It's not about owning the real estate versus leasing. And, we'll talk about some of that. But to me, the first thing what I kind of want to lead off with is, I look at this, Jonathan, and say there are costs associated with owning real estate. Like, it's not like same thing as with a house. Like, you just don't pay the bank, and every month you're building equity in that dental office real estate loan that you have. Like, you've got taxes, you've got interest, you have depreciation recapture when you go to sell. Like, this is not free money.
No, yeah, absolutely not.
And I think a lot of people think, well, it's just going to be cheaper if I own this. I'm not going to be paying a landlord. But if you're not paying a landlord, to some extent, you're paying a bank. And so again, it's not a one-to-one thing. And so, let's talk about what some of those costs are, and is there anything that you see that kind of weigh one way or the other, or even some myths or misconceptions that some of your clients may have when they're kind of looking at that decision whether to rent or own their real estate?
Sure. So as far as coming down to the question of, should I own my real estate in my practice or should I not? There are a few different questions that each doctor has to kind of answer themselves, because this is what, it's fairly interesting, is that, every person has specific things that they have that they want to achieve, certain goals that they want to achieve as a practice owner. And one of the things I find very interesting is just how different those goals can be from one phone call I have with a new practice owner to the next. And, for example, I'll have clients that I'll talk to and I'll say, do you ever plan on having an associate? And the answer is just a very enthusiastic no. They don't ever want to deal with an associate. How many operatories do you want to work out of? I don't ever want to work out of more than 5 operatories. How many offices do you want to have? Just one. How much in revenue do you want to do? $1 million. And, that person's goals are very different than someone who I get on the phone with and I'll say, how many, how do you ever plan on having an associate? Yes. Okay. Do you ever plan on having any other owners in the practice? Yes. How many offices do you want to have? Between 5 and 10. How many operatories do you want to work out of? As many as I can fill. Those two people are in very different situations in what they're going to try and achieve as practice owners. So that has to be the first piece of information we take into our consideration of, what should we be owning this real estate or should we not be owning this real estate? Once we kind of figure that out, and assuming it lends itself to not moving, I mean, that's basically what we're trying to ask ourselves is, do we plan on needing to need to move this real estate? Then the question after that becomes, assuming that becomes down to a yes, because if it comes down to a no, then our job's done. But if it comes down to a yes, then we have to say, okay, how much is this going to be leased for? Like, what is our current lease going to be for this practice location? And what would it look like if we're going to buy it? What are our payments going to be? And while that's a very rudimentary way of analyzing buy versus rent, it's really the first step. So if the two things are equal, like you alluded to in the question, it's not, just that the payment's going to go automatically to equity. It kind of goes also back to the last question about home ownership, in that you've got to be willing to be there for a long period of time before equity actually even enters into the equation. Now, on a 20-year note on a commercial piece of property, you're going to be harvesting equity a little bit faster, but you still have to be there for a good amount of time before that's going to be worth really anything to you. And so you analyze, lease versus mortgage payment. And then you add in all the extra cost on the mortgage payment. Now, the question becomes, what happens in that lease? Rob, you're the lease expert. Some leases have, common area maintenance. Some people will, like, I rent my office, and we have, the building I'm in has a janitor. So we get all of our stuff, we get trash taken out, and we get floors vacuumed and things like that. If I owned the building, I'd be paying the janitor, right?
Right.
I would have to pay to clean, or I'd have to do it myself. So
you pay the real estate taxes depending on the
exactly.
lease,
Right. So yeah, exactly. Some leases have you pay it. Some don't.
Or if there's a leak in the roof, you're going to fix it.
I mean, we're real estate owners of our own practice. I can say a couple things as a broker and practice owner and real estate owner. There's definitely energy and effort you have to put into the practice building like you would a house. You can reconcile that by saying there's some investment to that, but you're staying there after work to meet a contractor about something, or something's going wrong, so you can't call anyone. You have to call yourself, and sometimes that's during the middle of a day. The other thing I can say, and especially in the Northeast as a broker, what I've noticed is that when practice real estate is available for sale, most of the time, or what's most likely, is that the size of that practice is not set up well for the dentist's rest of their dentist life. So, our office included is a 5 operatory space. So there's not usually 10 operatory places to buy the real estate. Obviously, I know you guys do startups and you could build one, but that's just something I want the listeners and people who want to buy practice to understand that. Rob has said this many times in great lectures he's given to our residents and study club groups, that the most important thing is the money you make being a dentist. And if you need 8 operatories in a giant building in Philadelphia, you're not going to have the opportunity to purchase that building, but it could be a great practice versus getting 3 operatories in a home office on a side street. That's going to really curtail or limit how much you can earn. So it's just, I don't think a lot of dentists looking for practices get that point, and hopefully we're just sort of bringing some value to them in that space.
Yeah, absolutely.
Yeah.
And the whenever you start analyzing these different deals, you have to be able to understand that, there are financial reasons to do things, and there are non-financial reasons to do things as well. Like, Dr. Paul, you said, you may want to move. Well, we also established in the prior question that moving is not something people want to do. You're probably not going to want to do that. If you're planning on moving, then that can, a lot of times economically as well as emotionally, be a very difficult thing to actually end up doing one way or the other.
So moving is the opposite of nachos.
It's expensive. It's expensive to move a dental office, man. You get ready. In the average, I would guess that move would probably cost you $400,000. To move and build something out someplace else. So that ain't cheap.
Right. So when it comes down to once you've looked at those different things, you also have to consider, and this is something that that Rob sets people up with really well, is that if you're leasing from someone, you have a bit of an inherent risk in your business that whenever the lease is up, you may not have a space anymore, and you may be forced to move. If the lease is well done and things are reasonable and things like that, it probably won't happen. But to me, that's a very big benefit of owning the real estate, is that will never happen unless you want to, unless you're just wanting to move because of opportunity, right? So, and that's a very, very big. To me, that's a very big risk factor. What we find a lot is, usually dental practices sell dentist to dentist, and a lot of times the person who owns the real estate is the old dentist. And sometimes they'll want to keep owning the real estate so they can have that rental income every month as a retirement type thing, right? But what happens if, something happens to that dentist and, it goes to a family member who is a dentist or something like that? I mean, what happens at that point, whenever that lease runs out? Is that person going to be able to just move in to your office and start a new dental practice? I mean, there's a lot of little factors that go into that are inherent risk of leasing or included in the risk of leasing that just aren't a part of buying. And I mean, if we have a question of, I can pay, $3,000 a month as a lease, or I can pay $7,000 a month as a mortgage payment, then that's usually going to be a pretty easy conversation of, you should probably just lease. But right. If you're saying, okay, it's going to be $5,000 for a lease and, $4,500 for a mortgage, then that becomes a lot different. That's an entirely different question, right? And
that's a cash flow positive, decision to make. That right?
Exactly. Yeah. And we see those happen all the time in different areas of the country. We definitely see the ones that are like the first example rather than the second one. But we see a lot of the time that the rent ends up being very close to what a mortgage payment would be. And I don't know if that's because the seller has figured that out, or if they had a broker figure that out, or if that is what the market dictates in those areas, or if it is that maybe that the seller has refinanced it recently and they're just carrying a mortgage on it and they're trying to sell it for whatever they have in it. I don't know. But that is not that uncommon. And we even see it the opposite way. We sometimes see, a mortgage payment's $3,500 and the person who's leasing it wants to lease it for $6,500. And it's a very easy decision at that point to say, just buy it and then, and reinvest the $4,000 a month cash flow into paying down debt if you're debt averse. If you're not, then you can reinvest that into the practice, for equipment or for CE or for staff training or consulting or whatever it may be. So, much like the first question, there's a lot of different factors. There's no blanket answer in my mind of it's better to lease than to buy a real estate, or it's better to buy real estate than to lease. It's very specific to each person's situation.
Yeah, and it's definitely, this as much as anything is really driven by where you are in the country and what the real estate market is and what the costs are to acquire practice. I mean, there are places that we've had clients in the Midwest that it's staggering to me how cheap it is to buy a lot of land and do a project like this. And then meanwhile, somebody's in Seattle and it's so obscenely expensive that, I'm also in disbelief. So they're two very different things that are at work there. But I mean, to me, I come back to, I just think, it's just like everything else, that you need to have the proper planning. And, you've used my favorite words numerous times today, Jonathan, which is cash flow. Cash flow matters, and any decision that you're going to make in business, you need to know what the cash flow, repercussions are going to be of that, and how much is it going to cost, how much you're going to make. I mean, even, when I look at I ran a quick amortization here, on a 20-year real estate loan, a third over that 20 years, a third of those payments are for interest. So I think people need to keep in mind that if it's not a dollar for dollar thing, and that's before you start paying real estate taxes, maintenance, insurance, and all that other stuff, and owning real estate, as Paul said, there's something to that. It's work in and of itself. I think a lot of times people, I think they overlook that in my observation.
I don't want to pay for a janitor, and I don't want to have to hire a janitor for my office. I don't want to clean my own office. I mean, I clean my desk and everything like that, obviously, but I like that as an amenity for me leasing. And while obviously dental practices will have different things because of just medical reasons, that has to go into the quote calculation unquote of what is better for me as a business owner. And again, you also have to weigh that against all those other risks that we talked about. Service-based businesses where you see patients every day is very much different than Rob and I, getting if we don't own our real estate and our lease runs up and we have to move, I can move very easily. It's not going to affect my business at all.
Yeah.
But a dental
hassle.
It's a hassle. Yeah, it's a pain. I'll bitch and moan about it. But at the end of the day, it's not that big, it's not going to affect my revenue or my cash flow, like you said. But
yeah, if your landlord told you tomorrow they pay $50,000 to move down the hall, you'd say like, all right,
let's do it.
Get the movers. Yeah. Come on, we'll do it.
But for a dental practice, you're risking losing patients over that, because patients are creatures of habit. Like they'll hopefully the phone lines won't be the same, but they may just show up at the office and say, I need to get back on the schedule, and they may not even realize it's a different doctor. I mean, that's an extreme example, but that they may also not seek you out if you have to move. I mean, they may get a flyer from the new doctor that moved into your old spot. And that's a very big risk for people that put a lot of money into their practices. So there's pros and cons of each. And like I said, whenever you're weighing those non-financial pros and cons, like the risk part of leasing, you've got to take into context your personal goals, which is the first question. And if you're planning on moving quickly, if you want to buy the real estate, and that to me isn't, you're basically just doing that to not have to pay somebody else rent, which and to be fair, we do see a lot of people that will come in and they're like, the real estate is for sale with this practice, and the seller doesn't want to sell the practice unless they sell the real estate along with it. We 100% see that. So
yeah, well, here you go. Let me stop you there. And without going off on too much of a tangent, because we're going to wrap it up soon, but that to me is a huge thing, because what's going on there is what concerns me the most about owning dental real estate, which is there's really no market to buy, buyers. There's there's a market of one, basically, the person that's buying your practice. Dental offices are so illiquid investments to begin with that, once you get into owning it too, if the only person that can buy it is the person that's going to buy your practice, if they don't buy it, what do you do? Like, when do you sell? There's no real market for people to go around and round up, standalone dental offices, and we had a debate a few months back. Paul and I were giving a seminar, and somebody said, well, no, I've got a built-in buyer. I have a built-in buyer. You have one built-in buyer for your real estate, as opposed to owning other commercial real estate where you have, as many people in this world who would be interested in an investment on an apartment building that has a 10 cap return, like that's, people are going to line up if it's priced right, because that's an investment thing that you could sell. And to me, I look at, you can't sell your building if you need to own and operate your dental practice there, and so if things to me, investments are things that are liquid, that can be moved for the most part if they need to be. And dental office ownership is, you are bolted to that, like as long as you're practicing there, you got no choice. You can't afford to sell that. So to me, that makes it a really quirky thing.
It does. I mean, if you're taking it from the perspective of, I'm going to continue to have my office there. Will somebody buy this building for me at that point? Then that's obviously, it's just commercial real estate at that point. If you're selling it, I mean, I see practices. I mean, I know a lot of commercial real estate brokers around, and they'll send me practices for sale on occasion. I mean, they'll send me, the spot being sold. I mean, as far as if that is an actual quote investment or not, I mean, real estate obviously is an investment vehicle. Otherwise there wouldn't be, REITs or, different people that buy commercial real estate in general. I agree with what you're saying. But the way I'm thinking about it is, like, if I had if money was something I had a lot of, and I had 100 opportunities to buy practice locations that had a practicing dentist in there that was going to continue to give me a lease that goes along with that, I would think that would be a pretty safe investment. So I would think that the return on that would have to be a little bit less than I'd be willing to take a little bit less return for the safety of said investment, because traditionally, dental, just like the reasons banks lend money to dentists to build practices, typically practices stay in one location on a fairly often. So that's just a counter argument to kind of what you're saying.
Yeah, it's good. It's an interesting point. Well, this has been great, Jonathan. It's been too long coming. I'm glad you were able to take the time today and join us. So, if dentists want to find you, what's the best way for them to do that?
Sure. So I'm on all the social medias. I don't know how to use all of them, but I'm on there.
Please help Jonathan with social media.
So I get you don't know how many times I've gotten a Facebook message, and it'll be from like 4 months ago. I'm like, oh man, I forgot to check my messages. So
some of them just kind of end up in these weird places. You're not friends with them. But I'll sometimes look at like approve this message and like, where did that come from? You know, it's not like a business type of format that we're all used to. Like all your messages are in one place. It's like kooky.
Right. So the safest way to get a hold of me is through email. I have my email up on one monitor all day long, and that's just my name, Jonathan, JONATHAN @dentistmetrics.com. That's the safest way to get a hold of me. Those emails come to me. If not there, you can go to dentistmetrics.com, DENTISTMETRICS.com. We have all of our information up there, and you can learn more about our practice and things like that. And that's the easiest way to be able to get a hold of us.
Cool. And then, of course, your podcast, you're on iTunes and all the usual places. Start Your Dental Practice. So.
Exactly. Start Your Dental Practice. And if you go to startyourdentalpractice.com, it'll bring up a list of all the 100 hours or whatever it is of content that we have up there for free.
Good. Awesome stuff. Well, we'll put all this up in the show notes too. So if anyone's in their car and they want to find Jonathan's email address, they don't have to try to write while they drive. You can find it on the show notes. And Jonathan, thanks again. It's been a pleasure as always, Jonathan.
Thanks, Jonathan. Become the Philly chicken nachos on me. So
sounds good. Thanks, Dr. Bond.
Deductible.
Tax deductible nachos. Thanks, Jonathan.
Sounds good.
Thanks, Jonathan.
Thanks, guys.